Focus. Ideate. Innovate. Enable.
Hello and welcome to this special show, a curtain raiser to the India Mortgage Leadership Conclave. In a rapidly developing economy like India, the demand for housing and affordable housing as well as housing finance is ever increasing. In fact, a recent India Ratings report expects the affordable housing finance segment to grow at a compounded annual rate of 31.5% over the next 5 years, making it a 6 lakh crore rupee opportunity. This opportunity is also popularizing the concept of mortgage guarantee in India. And on this special show, we'll deep dive into the benefits that mortgage guarantee can offer to lenders as well as home buyers, the risks involved, the road ahead for mortgage players, and lots more. India is changing fast. With rapid development and urban migration, Indian cities have become congested with severe pressure on basic amenities such as water, sanitation, and most of all, housing. The Ministry of Housing and Urban Poverty Alleviation estimated India's urban housing shortage at nearly 18.78 million households in 2002, of which 95% were in the economically weaker section and low-income group segment.
हमने एक सपना देखा है कि जब आजादी के 75 साल हो तब हिंदुस्तान के गरीब को भी अपना घर हो।
To overcome this housing shortage, the Government of India launched the Pradhan Mantri Awas Yojana in June 2015 with a target of building 20 million affordable houses for the urban poor by March 2022, giving the housing sector a much-needed push.
I think the affordable housing industry has shaped up very well in the last around 4 odd years, when this term called affordable housing really got its meaning and popularity in India. And thanks to the Prime Minister's Awas Yojana, that is the real impetus which got the boost for this particular industry as such.
There's been immense institution building within the sector itself. And today we have large number of housing finance companies. We have banks, commercial banks, cooperative banks, regional rural banks, and they're all engaged in the housing sector. The overall quality of assets is good. The growth year on year is in the range of about 18, 19, 20%.
The government's incentives and also support for this segment, since it has critical linkage with the overall economy, is also an additional driver for this business. The demographics, the fact that people want to own houses, etc., certainly are long-term drivers, and we expect these drivers to continue to remain important going forward.
Affordable housing finance segment will continue to be our growth driver for times to come. There are huge opportunities because of the unmet demand, and the Honorable Prime Minister's vision of housing for all by 2022 creates a great opportunity for all the players to participate and lend to this sector.
As a housing finance company, we want to really reach out to the newer markets, newer customer segments, and provide them a housing finance solutions. Also, we are looking at how do we reach out to new to credit, first time buyers or first time who are really taking loans. So for this, we need to build newer risk underwriting models.
With reforms like the Real Estate Regulation and Development Act or RERA and the Goods and Services Tax finally in place, the demand for affordable housing is picking up.
There has been a sustained expansion in the housing finance industry, and that's been supported by a number of factors, which are ranging from credit support to risk support to risk mitigation and availability of refinancing from various institutions, and the overall interest of various corporates to set up their own housing finance companies.
In the last 4 or 5 years, I would say from a assets under management or volume of around 1,000 crore, we are something like 27,000 crore at this point of time and growing rapidly and fast. And this was one section of the market which is completely underserved, and this whole Prime Minister's scheme has given a massive boost to this sector, and it is slated to do very well in the future.
Since 2015, when this scheme came, we started with floating a specific product known as Apna Ghar for affordable housing. If we see a total portfolio, it would be in excess of 40,000 units.
But the challenges to affordable housing remain, with lenders and investors seeing affordable housing as a risky proposition.
If you look at the segment of borrowers, a lot of them are underinsured. Why I mention this is because in a situation of a calamity, when they have to dip into their savings, then it becomes a challenge to pay the EMIs.
So if you look at on the supply side, first of all, I think the price of the land itself is one of the big challenges for this, because the moment you say affordable housing, and if 50-60% of the project component or the project cost comes from the land, how do you really make land available at a much affordable price? So I think that's one of the big challenges in terms of getting land at a much affordable price so that it can be passed on to the customer.
We have been working on various models internally. There is a lot of external data that is available in terms of bureau score. That also we are using to make available affordable housing to this segment. But there are challenges that still remain in terms of the bank being able to assess the repayment capacity of these borrowers.
Developed land must be available to create housing stock. So we want that government should pitch in to create land bank so that those can be utilized for construction of the housing. We want cheap mortgage and cheap loan for the construction available for the banks.
Geographies are largely underserved. 16 out of the 28 states in India contribute only 10% to the mortgage that is being given out to these states. Bulk of this, so 12 states contribute about 90% of the mortgage origination which is happening. So lenders doing lending only in 12 states, and if you look at the 7 states, the top 7 states, they contribute about 70% of business, which means that mortgage is happening where the economy is doing well, the portfolios are doing well. States where borrowers are not so diligent in their repayments, lenders have traditionally shied away, and therefore even in this round, people are slightly slow in moving to those states.
India Mortgage Guarantee Corporation, or IMGC, India's first mortgage guarantee provider, came into being in June 2012 with a vision to make early home ownership a real possibility through the provision of mortgage guarantee.
Many homeowners are new to credit when they take their first home loan, which in turn provides an underwriting challenge because lending institutions do not have any previous credit behavior to base their decisions on. That is where a mortgage guarantee company like IMGC comes into play. We work with banks, housing finance companies and NBFCs to provide solutions for the salaried and self-employed borrowers. These solutions help them take higher loan amounts and easy mortgage access.
A joint venture between the National Housing Bank, Genworth Financial, International Finance Corporation and Asian Development Bank, IMGC is forging partnerships with lenders to build a stronger economy and a brighter future for homeowners across the nation.
The concept of mortgage guarantee is essentially is a credit transfer or credit risk mitigant. So we take the first loss on a home loan, and the risk gets transferred from the lender books to our books. So there are multiple benefits which accrue because of that. One of the key ones is the moment the risk gets transferred, the lenders are willing to take that little incremental risk and try it out, test and learn. So it will help them to get into new geographies, new segments, which will eventually give more credit to borrowers and help in expanding the affordable segment in the market.
See, we've partnered with IMGC to help us reach a larger segment which is currently untapped. And I'm sure in partnership with IMGC, we'll be able to cater to a larger segment in the affordable housing space and fulfill many more dreams of the LIG EWS customers.
Our partnership with IMGC will particularly help us in being able to meet the affordable housing requirement of the urban poor. So we hope that a large segment of the customers whom we are not able to provide loans at this point of time because they don't have a steady source of income, will be able to provide loans to them also.
IMGC has an experience of over 25 years in providing mortgage guarantee. We have worked with them to create solutions which can help the customers. One of the most important things is to expand the market, the available market where we can provide housing finance by co-creating risk management solutions with IMGC.
In every family, the requirement is that if the budget is X, generally the house is always of X plus something more only, because of which many people have to compromise on the kind of house they want for their family. But with this tie-up with IMGC, we are able to give a larger loan to the customer, by which customers are able to afford a larger house.
When IMGC first came in commercially and started talking to us, I was very sure that we will definitely tie up with them. It's a best practice. One, it's a best practice. Second thing is that it allows the rating of our lending company to be a much better rating. As such, so the rates at which we can borrow from lenders is finer. That allows us to pass on those benefits to the borrowers.
In some cases where we think the risk is too much for us, we can still take it because there is IMGC support.
All right, let's head into a short break at this point. On the other side, we'll be joined by the leadership of India's first mortgage guarantee company, IMGC, or India Mortgage Guarantee Corporation. Stay with us for that exclusive chat. Welcome back to this special show, the curtain raiser to the India Mortgage Leadership Conclave. In this segment of the show, let's find out how mortgage guarantee can help unlock India's trillion-dollar housing opportunity, how it is accelerating the growth of affordable housing in India, and the value that it can create for home buyers if you couple it with emerging technologies. Let's welcome the leadership of India Mortgage Guarantee Corporation for this absolutely exclusive chat. Mahesh Misra, CEO at IMGC, Shrikant Srivastav, Chief Risk Officer at IMGC, and Sovan Mandal, Chief Commercial Officer at IMGC. Welcome, gentlemen. Thank you so much for being with us on the show today. Mahesh, I'd like you to set the context for us. Take us through the current status of the housing finance sector in India and why is mortgage guarantee critical, first from a lender's perspective and second from a consumer perspective as well?
When you look at what's going on in India, firstly, there is a fair bit of systemic impetus currently. At one level, there is the Pradhan Mantri Awas Yojana, which provides tangible benefits both to the borrowers as well as the lenders. And it's a scheme that is contributing significantly to the housing for all. Right. At the other end, there is also a lot of support in terms of giving out new licenses, and many new housing finance companies have just started operating. So what is happening is, A, there is a lot of focus on affordable housing. And secondly, a lot of the newer players are trying to identify segments, be it salaried versus self-employed, be it newer geographies, trying to identify new segments that will outline their business strategy when they move forward. Right. Thirdly, because of some slowdown in the primary real estate market, the existing players are forced to rethink their operating model, and they need to work in newer geographies, again to leverage the affordable housing opportunity, as well as to capitalize on the higher relative growth opportunity that these markets currently offer. So for us, it's actually a fairly great time to be operating, because most of the people are trying to get into things that they've not done in the past, where everybody is focused on growing, but growing sensibly.
So you're very optimistic.
Absolutely.
Okay, great. Shrikant, the affordable housing segment is still a relatively new one in India. What are the risks involved in mortgage guarantee in this space? How do you identify, how do you control and mitigate those risks?
Of the 16,50,000 crore of book that India has across all lenders put together, 89% of the loans are in less than 30 lakhs and about 66% of the loans in less than 15 lakhs. While the affordable definition, definition of affordable housing is kind of gray, because various entities have used various definitions. But to us, really, it is the 15 lakh, less than 15 lakh crore, which is the primary segment. So if that constitutes 60% of the total book size of India, why is it that it is being so talked about now? It is because of the fact that earlier it was the formal income, salaried borrowers working with large, medium, and maybe small enterprise who were serviced, and on the self-employed side to a very small extent by the HFC segment. Bulk of this 66% which has been funded today was by the government banks purely because of the distribution size that they have across the country, and HFCs because of the cost of fund disadvantage that they have, that they need to go to a borrower who will buy it at a higher price because they are not served. But this time around, what is happening is that you are going deeper in this segment, so you are actually touch basing customers who are working with micro enterprises, people drawing cash salaries, people working with partnership firms, proprietorship firms on the salaried segment, and self-employed, of course, continues to be underpenetrated, grossly underpenetrated. So these are the two segments which are now being again looked upon by the HFC segment mainly, and some of the large banks also have started running programs, primarily because the mid-ticket and the higher tickets have kind of slowed down because of the developer issue across it.
All right. So when you're engaged in building partnerships and collaborations for IMGC, so take us through some of the key collaborations, and for a product that's still very new, very nascent in India, how challenging is it to build these partnerships?
We have tied up with big, large and small players. So we have around 12 partnerships as of now. We are working with some of the large lenders. You will see some announcement by end of this year. Hopefully, they will get them on board. So we plan to capture around 60% of the market by March 2019 and start working with them.
And you've received great response from banks in India for this?
Yeah, it's taking time. It's a new concept. So people are evaluating the product and taking their own time to adopt it. We are working with lender partners to broaden the product offerings in the marketplace so that we can offer higher eligibility to the borrowers. Just to give you a small example. Let's say you have salaried borrowers who are middle-aged, around 45 years. Most of the lenders will extend them a home loan till the retirement age.
Correct.
But we work with lender partners to enhance beyond retirement age, thus increase the eligibility for the borrower. They have the repayment capability. It's just that they're not getting the desired loan amount because of the retirement age coming on the way.
But aren't lenders concerned about NPAs?
Lenders are concerned, which is where we step in. I mean, because we have experience from all over the world. We have seen markets, we have seen our technical partners have worked in developed markets, in developing economies. We have built that into our product program. We built that into our risk assumptions. We built that into our pricing. And that helps us because we come with a larger pool of experience, so to speak, which kind of helps us take some of these underwriting decisions.
And Shrikant, are the risks any different in developed markets?
The world is the same. However, the difference is that it is more about, early home ownership essentially is the driving philosophy behind the product. It is more about doing high LTVs, that is giving more loan to the cost of the house. So if your cost of house is 100, they could go up to 95, 97% of the property value. But in India, unfortunately, that's regulated. So that is the essential difference. And therefore, we found that despite the HLTV being regulated and you're not allowed to do more than 75, 80, and 90, depending on the ticket size, there is still a huge chunk of self-employed and micro enterprise salaried borrowers who are unserved or underserved. So that, I think, essentially is the difference. I think it is unique to India, but I think it has so much of opportunity that it will sooner or later catch up.
Right. And so how is IMGC really accelerating the growth of the affordable housing segment as a whole? You're the only player here in India. And are there any data points, any stats that you can share with us on that front?
So if you look at our portfolio, almost 80+% of the portfolio is below 30 lakhs. And around 65+% of the portfolio is below 15 lakhs. So with all the lender partners we are working with, we are innovating with them products. We are helping them to get into specific segments, different geographies. So they're leveraging mortgage guarantee to get into these segments. Earlier, they were a little worried of going into these segments for various reasons. So we're helping them to those segments. Second is, we are working with a lot of affordable players to help them to get into the affordable segment. So that's the other way the lenders are leveraging mortgage guarantee. We have recently, jointly developed a product program with one large lender partner where we are leveraging their distribution strength, clubbing with the risk mitigation strength of IMGC to get you a different segments. Hopefully all these initiatives are taking these lender partners and helping them to get into a segment which they had not explored earlier,
Right.
and giving them the opportunity to build their assets, earning assets without incremental risk.
All right. And finally, the India Mortgage Leadership Conclave is coming up at Mumbai on the 1st of November 2018. So what's the philosophy behind this event? Why did you think about doing this, and what can we expect from there?
IMGC is very uniquely placed because we work with the entire lender ecosystem. We work with public sector banks, we work with private banks, we work with housing finance companies, we work with affordable housing companies, we work with NBFCs.
Yeah.
If you look at our shareholding, it's very diverse. We have a regulator, we have an international mortgage insurance expert, and we have developmental institutions.
Right.
So we are ideally poised to catalyze thought leadership in the housing finance space. The India Mortgage Leadership Conclave is a first step in that direction.
Great.
For 2018, the theme is about innovation and emerging opportunities. We will specifically focus on what it takes to create a housing finance company for tomorrow and analyze the importance of technology and analytics with the prism of risk management. So these are the two key themes for this year, and we certainly hope that this will be an event that people will find very useful and look forward to in the years to come as well.
All right. Thank you so much for joining us on the show today, gentlemen. Well, with that, it's a wrap on this special show. Keep watching this space for the India Mortgage Leadership Conclave that will offer path-breaking ideas and insights from industry experts to chart the way forward for mortgage guarantee in India. That's coming soon on Network 18. Thanks for joining us. Goodbye.
Focus. Ideate. Innovate. Enable.